Welcome back to the show. We have quite a bit to discuss. This upcoming week is going to be one of the most pivotal trading weeks we've had in a hot minute. In all reality, this upcoming week has everything a trader could possibly ask for. I'm talking the fact that you better buckle up for larger than normal trading ranges due to the fact that the government is finally reopened. We also have the fact that it's going to be earnings, at least for Nvidia, the #1 stock in the entire world, and also the fact that we have breaking news from the president. I also feel like I'm forgetting one major thing. The fact that the overall market is teetering on the edge. We're either going to have a pretty incredible bounce or a pretty gnarly sell-off. And my goal with this video is to better prepare you for all of that. I want to get into all the major news, the stuff you should be paying attention to. I want to give you the bull case, the bear case, and at the end of the video, I'll be giving you my own thoughts and opinions of where I see the market going in the short term. Whether up or down, we're in for a pretty wild ride. So without further ado, let's get to it. When the market officially closed on Friday, we finally had a little bit of a breather. Nasdaq closes higher, snapping a 3-day losing streak as tech stocks recover some ground. So the overall market, the S&P 500, it got hit for a few days there, but saved itself at the 50 EMA, got its upside gap fill. Looking at the Nasdaq, pretty much the same situation, saved itself at the 50 EMA, got that upside gap fill. There is still another one on NDX, also one on SPX, but we're going to be circling back to that. I just want to call out what these horizontal lines are. As I'm filming this, Bitcoin is looking a little bit rough right now, currently at 94,000, lower highs, lower lows. There is big support at 92, so I want to call that out. There's a good chance by the time you're watching this that we either clearly have a bounce or we clearly have a breakdown. So crypto definitely under some pressure, which brings me to the first major point of this video. All three of the core promises behind the bull market are coming under question. Feel free to read this article if you want, but I just want to talk about the general concept of the bull market that we're in. So whether you want to talk about seasonality pushing higher and higher and higher, whether you want to talk about the AI trade, the government reopening, or anything in between, before we really get into the nitty-gritty of this video, I want to get your thoughts. Do you think in a general sense that the bull market has made its high and it's time for a pullback? Or do you think that this is just a momentary hit to the market? We're bouncing off the 50 EMA and we're going to get that beautiful Santa Claus rally. Please, I would love to hear from you guys, the community. I want to know, what are you doing? Let me know in a comment below. And as all of you guys are taking a second to let me know your thoughts on the situation, I should probably do my job and paint a better picture of really what's going on. And as I like to do at the start of every week, especially heading into OPEX, let me remind you of seasonality. Basically, ever since the start of October until halfway through January, you get a very nice bullish seasonality skew, really referred to as the Santa Claus rally. We're roughly halfway through November, which you could argue is a little bit choppy. And then around Thanksgiving, there's a bit of a dip. And then from there to about really the start of November, it's pretty much up and away. This is based on the last 20 years worth of data. If we look at the last 5 years worth of data, you can see that we are heading into a little bit of a bullish period. And the same thing if you look at the last 3 years worth of data, we're heading into a small bullish period. Now, I should remind you, as we've recently seen, seasonality is not the end-all be-all. Just because it's bullish or bearish, that's not a guarantee. It just gives you an idea of, like I like to say, the headwinds and the tailwinds of the situation. There's a very fair argument that this time around is different, whatever that means, because we are in a unique situation of the government reopening. What in the world is going on with the inflation data, the jobs data, what's happening with the trade deals, what's happening with earnings? Yes, I get that this time is different, and I want to call those specific things out. This week, we will be getting the FOMC meeting minutes on November the 19th. Remember, that's when volatility contracts, the VIX contracts, also expire. Later on, we're going to get some manufacturing numbers, some home numbers, and then also some S&P flash numbers, the PMI right here on Friday. So please remember all of that. You should also know that we're going to hear from a lot of different FOMC voting members, all those fancy Fed people, pretty much every single day this week, Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, literally every single day of this week, we're going to be getting some sort of Fed member monetary policy update, another thing to obviously pay attention to. As I alluded to at the start of this video, we're going to get the earnings from the biggest stock in the entire world after the market closes this Wednesday. We're going to be hearing from Nvidia. Yes, there are other earnings. You might be caring a little bit about Home Depot, Target, Webull, Walmart, Palo Alto. Yes, those are all important. They're all impactful, but obviously the world is paying attention to Nvidia. As I'm filming this, the expectation of the implied move is around 6.6%. If you do the math on that with Nvidia, that means that we're kind of betting on a range anywhere from about 205 down to roughly 175. But of course, I'm filming this a couple days before the earnings, so who knows? Is it going to save the 50 EMA and get this technical breakout, or is this just going to be a bit of a dead cat bounce and we end up plummeting from there? Obviously, it's going to be really in the hands of the company and the market's reaction to those earnings. So I just want to call out, put it on your radar that that's going to be big. I would say it's a 50-50 shot, but right now, bouncing off that 50 EMA, I can tell you that the market is a little bit optimistic. We recently did put in this higher low. If you look at the options market on Friday, there was actually quite a bit of call buying. That is this orange line, longer dated call buying. So like I said, there is a bit of optimism going into it, but at the end of the day, you're not going to get that far away from just the mathematical skew of a 50-50 opportunity. In my humble opinion, Nvidia's earnings, or I should better say, the market's reaction to Nvidia's earnings, are really what's going to decide the next major leg in the overall market, as in, do we get that Santa Claus rally to a new all-time high, or is this going to be a little bit of a dead cat bounce? We break the 50 EMA and have a pullback in the overall market. Obviously, I believe that Nvidia's earnings are going to be the most impactful event of the upcoming week, but in terms of things you should pay attention to, the same day on Wednesday, you have vol expiration, you have the FOMC meeting minutes, the market closes, we hear from Nvidia, and then fast forward to Friday, that's actually OPEX, and in between all of that, we have a ton of Fed members. So those are the things that I think are going to have a big skew on whether we go up or down for the week. So with respect to the bull and bear case, well, let's set up how that would actually look. From a technical perspective, the bull case would say, yes, great, we save ourselves at the 50 EMA, we make this higher low, and we push probably at minimum to get this upside gap fill on SPX to 6829. Looking at the Nasdaq, very similar situation. Technically, it's an equal low. I guess it really did go slightly lower, but let's call that an equal low. Same thing, bounces off the 50 EMA, starts to recover, probably strong resistance around 25,600, 700, and there is still that upside gap fill at 25,887. That would clearly be the bull case, and the bear case, at least from a technical perspective, would be the perfect inverse, where we put in a lower high relative to these recent lows that we've been seeing and the recent highs we've been seeing. But this structure right here, we're already seeing those lower highs, continuing with that trend, maybe not getting this upside gap fill, pressing on the 50 EMA for the third distinct test in basically the last 2 weeks, and then officially breaking. Obviously, from a technical perspective, that's what the bear camp's going to be looking for. From an options perspective, we are seeing quite a bit of whipsaw. Not long ago, as in 3 days ago, everyone was tilted long on calls, and then within 3 days going into the conclusion of the week, everyone is now tilted into puts. So the bears are going to say, hey, I want to see puts that skew increase and things get more and more expensive, people buying that downside protection. Or if we really do get that technical bounce off the 50 EMA, if Nvidia's earnings are good, I wouldn't be so surprised if not only do we return to kind of this midpoint here, but actually get all the way back to being heavy on the call skew side. The fact that so many people bought downside protection on a lot of these major tech names, yeah, it's interesting, but what I find to be the most interesting and the most telling is what I'm seeing play out in volatility, i.e. the VIX, which is the volatility of the S&P 500. You can see that most of the time when you get above 20, 21, it is quickly reverted. Obviously, you have this example back in mid-October where we got a bit higher, but pretty much every single time we get into that lower to mid-20s, it lasts for a couple days and then the VIX takes a noteworthy hit and then the market ends up recovering. Even though it's not exactly like this, there is commonly an inverse correlation, as in when the VIX starts to fall, you see this Vanna-esque rally type of situation where the vol falls and then the overall market starts to pick up. So clearly something to pay attention to, but really what I want to do is point out that we saw an increase in these vol bets, but they all stopped on Friday. I'm talking on the 14th, and then from there, all these bets are actually that vol is going to decrease for this upcoming week and for time out from there. Obviously, the situation is dynamic, but I'm just pointing out the fact that we're starting to see these downside bet protection. Well, they're kind of becoming non-existent, which is maybe telling me that the bulls have a slight upper hand. So to quickly summarize, to give you guys that TLDR, the bull case is looking for the technical bounce off the 50 EMA with the, I would say, ultimate target, at least in the very short term, of that upside gap fill. And clearly in the options market, you would want to see that call buying, you'd want to see the put selling, which could lead to a Vanna rally depending on how many puts actually get sold. And then from there, you might end up seeing a gamma rally. On the bearish side of things, you would basically want the inverse to happen. You'd want to see the third consecutive lower high, the retest of that 50 EMA, the breakdown. Maybe we get the upside gap fill, maybe we don't, but really the key thing is making the fresh lows on the daily chart. And obviously in the world of options, that vol situation right here, you would actually want to see it the complete opposite. You don't want to see red, you'd want to see vol expand and maybe the VIX start to push something like 25, 28, 30. And now for the golden question of what's more likely to prompt the bullish or the bearish case, well, it's going to be Nvidia's earnings and also everything related to OPEX, vol expiring on Wednesday, and then all the other good stuff expiring on Friday. And now that we're all on the same page for what you should be looking for, regardless of if you're in the bull camp or the bear camp, I want to share my own thoughts on this situation. Now, obviously, this is not a guarantee, but I believe this is the highest probability pathway forward. So once again, not guaranteed, but this is obviously where I'm putting my own money. I like the bounce on SPX and NDX off this 50 EMA, and I don't see the biggest events happening until Wednesday, which tells me that I think we're at minimum going to be getting a bounce. Now, after Nvidia's earnings, it might prove to be a dead cat bounce, or it might be proved to be a legit bounce, a double bottom, this W structure, and then we bounce and rally for the end of the year. I don't know about that in terms of real bounce, fake bounce, but I think in the short term, we're going to see some sort of measurable bounce. And obviously my first target would be this upside gap fill to 6829. And I just want to make it clear that I'm not just talking the talk. I am walking the walk. I am currently playing this with VIX puts. I'm more confident in the VIX falling here than necessarily how high will the S&P 500 go. And also if it does start to bounce, well, going long on calls, especially out of the money calls, they're going to get vol crushed anyway. And if they do get vol crushed, well, that means vol should keep falling. So these puts should really play. As of right now, I am up a decent chunk, around 21%. But what I'll be looking for going into Wednesday market close before Nvidia's earnings, I will be looking for the SPX to keep climbing and at minimum for vol to keep falling. So that's my major play as of at least the point that I'm filming this video. Now, I think it's pretty evident, but just to state, obviously after market close on Wednesday and really looking to see how the market reacts to everything on Thursday throughout that whole trading session, I think we'll have a better idea of what the next leg is truly going to be. But from now until then, basically, I'm just looking for a little bit of vol crush. But I do want to let you know, after all of that, after Nvidia's earnings, after VIX, after OPEX, all of that stuff, there are a couple things you should be, I guess, mindful of. Breaking, U.S. Treasury Secretary Bessent says that Trump administration is targeting a trade deal with China by Thanksgiving. Bessent says he is confident that China will honor this deal. So that might be announced this week. It might be announced next week. And you should also know, fast forwarding to December, right now, everyone's a little bit confused on monetary policy. And basically it's a 50-50 shot, according to Polymarket, according to Kohrs, of are we going to get a 25 bips rate cut or no rate cut whatsoever? Once again, that will be the thing to pay attention to in December, about the second week of December, December 10th. So basically, the party is back on. For the past 6-ish weeks, we've been kind of flying in the dark, but now that the government's reopened, we're finally going to get some of those reports. We're in a beautiful week of OPEX. We're going to hear from earnings. And from a technical perspective, it's kind of either a do or die time. Either we're saving the 50 EMA and getting that large bounce, or we're breaking down. I can understand if you're watching this, you're basically saying, so it could be bullish or bearish. And in reality, yeah, statistically, that is the right answer. My point is, if you can identify it early, even on a 50-50 shot, it's more of a better skew for risk to reward. You can take on minimal risk, whether it's long or short, and you're just anchoring it to whatever the recent extreme is. And then from there, if you get the next leg, well, the reward really dramatically outpaces the risk. If you ask me, at least in my own humble opinion, I do believe at the first part of this week, we're going to see at least some form of a bounce. I'm looking for vol to get crushed. And then whether that continues or if it's a dead cat, well, you better ask Nvidia. Like I said, these are my own thoughts and opinions, and I did distill them a little bit better in the newsletter. If you're not signed up for it yet, I highly implore you to do so. It is completely free. I break down what's going on in the market. I give you a cheat sheet for earnings and this very cool graphic, and then all the major macroeconomic events. And on top of that, the seasonality for each individual trading day. So feel free to sign up for that. Like I said, it is free. It's in the description below. That's what I have for you right now. This upcoming trading week is going to be a pivotal one. It's going to be an exciting one. I think there's going to be a lot of big ranges, a lot of opportunity. We just have to stick to our core trading plan, respect our risk, and ideally have the discipline to follow through on exactly what we know we should be doing. That's what I have for you today. I appreciate all the good vibes. I'll catch you in the next one. Peace.